Welcome to People and Profit. I'm Kate Moody. Coming up, is America facing a banking crisis? As regulators try to stem the fallout of the collapse of Silicon Valley and signature banks, we look at the risks for the rest of the system. The US and EU continue their crackdown on TikTok, but what impact is it having on the popular Chinese app? And our reporter delves into biomethanization, the clean energy source that's taking root across France. It was the biggest shock to the US banking sector in over a decade and a half. Silicon Valley Bank, previously the country's 16th largest lender and a signature bank, collapsed, and regulators seized their assets. Just days earlier, the crypto lender Silvergate Capital had also folded. All three specialized in tech or crypto clients. The failures within the space of 1 week sent shockwaves around the world amid fears that more trouble was to come. The US government stepped in to guarantee all deposit accounts at Silicon Valley and signature banks, as Joe Biden insisted the damage had been contained.
Thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well.
Let's speak now to Nicolas Veron from the Peterson Institute for International Economics in Washington and the European think tank Bruegel. Thank you for joining us today. The U.S. government has downplayed the risk of contagion in the banking sector. What's your take? Do you think other lenders could follow suit here?
Well, the authorities are telling us that the banks are safe and sound, that they're well capitalized. And when I say the authority, I mean in particular banking supervisors. So in the US, that's mostly the Federal Reserve. In the European Union, that's mostly the European Central Bank. Now, the problem is we also have seen a case of unexplained and pretty large scale supervisory failure with Silicon Valley Bank and a few other banks in the US. So the Fed, the Federal Reserve, as a supervisor, has lost credibility and reputation in that episode. We're only at the beginning of, the understanding what exactly happened. But the upshot of this is that when supervisors say everything is okay, the markets are not so sure, and that creates a lot of volatility.
What's your assessment of the U.S. government response to the collapse of Silicon Valley and signature banks?
I may be a bit out of consensus here, but I think actually the response was excessive. I think it was necessary to provide a lot of liquidity to the banking system because there was a deposit run going on, and so there was a need to make sure banks can borrow from the Fed at maybe conditions that will not bring them under in order to replace those deposits and not have to do fire sales of assets. But what the US government also did, on top of this necessary action to provide liquidity to the banking system, is provide an unlimited guarantee to deposits on paper only for the depositors, the large depositors, some of them running in the tens or even hundreds of $1 million. What that means is that it's really a big change in the US system, which was predicated so far and for the last few decades. This is a long-standing policy, it goes back to the 1930s, on a limited deposit insurance. And I think moving from limited to unlimited deposit insurance, a move which I view personally as permanent and general, is a radical transformation, a regime change for the U.S. financial system, and I'm not sure it's for the better.
Now, we know that authorities are looking into the potential warning signs or red flags that might have been missed in leading up to this collapse. Do you see any of those similar warning signs in other banks at the moment?
Knowing a little bit more about the European Union and specifically the Eurozone, my perception, we'll see whether that perception has been correct, has been that the European Central Bank, as a banking supervisor, has been very focused on the kind of risks that materialize with Silicon Valley Bank, which the jargon calls interest rate risk in the banking book in particular. And therefore, I will be surprised if the same kind of sequence pops up in a Eurozone bank as we saw with Silicon Valley Bank. Having said that, I've been surprised with Silicon Valley Bank to start with, so I have to be cautious in my statements.
We saw that Silicon Valley Bank in particular was really affected by the Federal Reserve's rapid hike of interest rates over the last year or so. Are other banks similarly exposed? And what do you think comes next for the Fed as it faces this dual challenge of ensuring stability in the banking sector and also fighting inflation?
I mean, banks are supposed to manage those risks and to manage them competently and to hedge against them. And there are instruments for that, derivatives and the like, and, having a prudent balance sheet management and what is called in the jargon asset liability management. So Silicon Valley Bank failed at that, and the supervisors of Silicon Valley Bank, which are the state of California, but primarily the Federal Reserve, didn't spot that, especially in the last 2-3 years. I don't expect the same magnitude either of risk exposures or of risk management failures and supervisory failures, for that matter, in the European Union. And even within the US system, it's clear that Silicon Valley Bank was at an extreme point of the range of situations in terms of exposure to that risk. So that's for the banking sector. Now, you asked about monetary policy. I think the Federal Reserve is very insistent, and rightly so, that its monetary policy decisions will be driven by its mandate about inflation and employment in the US and not by those considerations of which banks may fail. So I think they may adjust a little bit the monetary policy stance, but it will not completely change their course in terms of having to raise interest rates if they think that's necessary to stop inflationary dynamics. And I would say the same about the European Central Bank.
This shock to the banking system is coming about 15 years on from the global financial crisis. Are we seeing that lessons have been learned and implemented over the last decade and a half?
I think the response is not uniform across all countries. So in the US, we've already seen a full circle of the regulatory framework being tightened in the early 2010s and relaxed in the late 2010s under the Trump administration, which, by the way, explains some, not all, of the mess at Silicon Valley Bank. And now will be tightened again, which also explains that some of the loss of share prices in equity values of US banks in the last few days. In Europe, we hadn't gone through this cycle of relaxation in the late 2010s. So I would say probably we're better prepared. But, the next few days will tell us more about that.
Nicolas Veron, thank you so much for joining us on People and Profit today.
Thanks for having me.
Next, is TikTok facing a final countdown? Authorities in the EU and US are tightening the screws on the popular Chinese app, which has over 1 billion users worldwide. It's been banned on official government phones on both sides of the Atlantic, while American lawmakers are trying to expand the government's power to restrict apps that are deemed a national security risk. India's government banned TikTok altogether in 2020, and momentum towards a similar move is now growing elsewhere. Charles Pellegrin joins me now. Remind us why TikTok is a source of concern for Western policymakers.
Well, the main issue is that the app is owned by a Chinese firm called ByteDance, and this raises questions on whether or not Beijing can use it to harvest user data or advance its interests by influencing opinions. TikTok hawks in the US and EU often cite one very broad piece of Chinese legislation to back their claims. The National Intelligence Law of 2017 supposedly orders any Chinese organization to support, assist, and cooperate with intelligence services, whether they operate domestically or abroad. The EU privacy regulator is investigating the alleged transfer of EU user data to China.
So what is TikTok's response?
Well, TikTok says it's a pro-compliance company willing to work with different regulators to adapt to different markets. And they've always said that if asked, they would not provide data to the Chinese government. Well, to reassure European regulators, TikTok launched Project Clover, a new security regime which adds further controls on data access and transfers, gives oversight to a third-party European security company, uses new privacy technologies, and most importantly, stores European data locally in centers located in Ireland and Norway. They have a similar plan for the US called Project Texas and have also invested in lobbying efforts to get lawmakers there on their side.
How then are users reacting to all this debate?
Well, the number of TikTok users worldwide is still expected to go up 15% every year until 2025. And the app's core user base, people under 25, don't seem to be too bothered by all the controversy around its ownership, often using VPNs or other workarounds when the app is banned in some settings, like on some US university Wi-Fi networks, for instance. One US poll shows that those who are the most likely to support a ban on TikTok are baby boomers, with 34% in favor. Meanwhile, only 20% of Gen Z respondents said they favor a ban. Well, this puts government officials in an awkward position, as the platform is one of the best ways to reach a younger demographic.
Charles Pellegrin, thanks so much for that update. As Europe races to secure sustainable energy sources, France is doubling down on a process called biomethanization. It's already producing about as much energy as a nuclear reactor, and that could double in the next 2 years. Rebecca Martin and Antonia Kerrigan have this report.
Moritz Quack was one of the first in France to take a chance on biogas. The same in quality as natural gas, biogas is produced by biodegrading organic matter.
What happens in a methanizer is biologically the same as what happens in a cow's tummy, but we create the conditions artificially in a vat.
He has been recycling farm waste for 10 years, now producing 13 gigawatt-hours worth of gas per year, which he puts back into the grid. That's enough to fuel several hundred households.
That's what's so important, producing green energy for the local area. And on a national scale, by 2030, farmers could reach the capacity to produce 20% of the country's gas needs. In other words, if we pull this off, we will have no more need for Russian gas.
Activists at the World Wildlife Fund see a real future for biogas, but they caution against developing the industry too fast, at risk of encouraging intensive, irresponsible farming practices.
What we absolutely do not want is for farmers to start using pesticides and artificial fertilizers, irrigating cover crops, just to fuel the methanizers.
Harnessing the power of 2 or 3 new methanizers per week and creating 8,000 jobs in 2022 alone, it's a booming business. But inflation could slow this growth, with the cost of investment 20% higher than 10 years ago.
That's all for now. Don't forget you can find this and our previous shows on the France 24 website or as a podcast wherever you usually listen. You can also get in touch with your comments and questions on social media. Until next time, thanks for watching.
A program about women who are reshaping our world. We meet those who seek equality, be it in the boardroom or at the village well. The 51% brings you stories from across the globe about the women who are challenging the way we think.
The 51%, presented by Annette Young on France 24 and France24.com.